The difference between a dream and a goal is a plan. I love that quote, and it's actually the foundation of what I want to talk about today, and that are my three main factors in building your plan when you're looking at getting qualified and purchasing a home. My name is Drew Smith. I am a licensed loan officer, and what I'm going to talk about today is based off hundreds of conversations I've had with borrowers, and these are the most common that people have. So if they have these three things in line and set up, they qualify at a much higher rate than those that don't. Now, I'm not saying that you have to have these and you're doomed if you don't, but I'm just saying based on my experience, if you have these in order, your odds of qualifying are much higher. The first thing is credit. Every person, every borrower, you should know how to access your credit report. You should know what's on your credit report. Now you can build that and get accounts with each of the three main credit bureaus, Equifax, Experian, TransUnion. You can actually create accounts there, and you are entitled to a free credit report every year, and there's actually ways that you can check it on a monthly basis. Now there are instances. We live in a world full of humans and they make mistakes. There are cases where there's actually something on there that's either fraudulent, it was put there by accident, and it can easily be removed to strengthen your position. So get in charge of your credit and be proud and take pride in the fact that you have a good credit report. Now remember, that report and that score, it's based on your relationship with borrowing money and paying it back. So on that credit report, you're going to have car loans, credit cards, student loans, personal loans, and you are showing your history of making payments on time. So take pride in knowing that, hey, I'm a good borrower, I'm a good steward of money, you can trust me, I'm a good credit risk, I always pay my debts on time, okay? So take charge of that credit report. Next is personal finance. You should know your budget and you should work on your budget. You should know what you make every month. You should know your monthly obligations and your bills. And at the bottom, your bottom line, you know how much money you have left over. After you've gotten paid, after you've paid the bills, what do you have left over? Now, in a perfect world, if there is some left over, putting some away for your future purchase would be awesome. Right? If you can show over time, doesn't matter how much it is, if you can just put a little bit away every month to build that income and to build your bank and your reserves. You will strengthen your position if you can go to a lender in a bank and say, hey, I've got this stack of cash here in my bank account. If anything were to happen to my job, if I got fired, that doesn't matter. I would not be late on any of my payments. I've got this money that I can use to float myself until I find a new job. So build your financial position. Also with that, you need to look at your actual statements and how that's being shown and reported, right? So on your bank statements, typically with any loan program, we're going to want at least 2 months worth of bank statements. So what's a problem is when you see late payments, derogatory information, NSFs, right? Non-sufficient funds, overdrafts, bouncing some checks here and there. You don't want to show any of that. You want to have a good history. So making sure everything's on time and that you have accurate records so you're not accidentally spending more than you actually have. So have good statements and financial health. The next thing, or the last thing, I think is actually knowing what products are available. So sit down with somebody, maybe you have a friend or a family member, myself, a professional in the industry that can go over the different loan programs and the different requirements. So depending on your personal situation, you might qualify for 1 or 2 different programs, but which one would be the best and what would be required of you for each one. Maybe one program you can do no money down, but another program you might need a little bit money down, but maybe the monthly payment's a little different or the closing costs are a little different. So research each of the loan products and sit down with a professional. Then you can kind of work backwards from there. So if you, after that sit down, you know, okay, well, I'm going to need this much money for this much money for that. Then you can go back to the other two, either your credit or your financial situation, and start building those so that when you're ready for that third one, you're good to go. You have enough money to cover everything. Also, they'll have better insight on what's going on in the market. So right now, we are currently in what I like to call a buyer's market. Well, it's not just me, it's the industry, a buyer's market. This means it's benefiting the borrower right now. We are getting seller concessions. That means that houses are sitting on the market longer, and sellers are incentivizing buyers to purchase their home by saying, hey, I will cover some of your closing costs, and they are giving seller concessions right now. But who knows what the market's going to be like when you're ready to purchase. So sitting down with a local expert to know what's going on in your specific area where you're looking to purchase will help benefit you as well. So there you go. Those are my 3 main factors when you're looking at building a plan to get qualified for a purchase or a future purchase. Get your credit in order, finances in order, and know what you could qualify or the programs out there that you could take advantage of that would be best for you and your family. So hopefully that helped. Maybe it just brought up a bunch of more questions. I'm always up for a conversation, so please feel free to reach out to me. My information is on my page. Again, my name is Drew Smith. Like and follow for more mortgage tips.